Hi, everyone. I'm Mariangela Martinez, Content Marketing Specialist at Alpaca.
Hi, I'm Alan Spence, VP of Operations at Alpaca.
In our series of Chatting with Alpaca, we're going to dive into the backend operations of a trade. What happens when you click buy or sell and see in your account the stock or the money? And Alan here is going to explain this to us.
Yeah, absolutely. Thank you, everybody, for tuning in. I've been here since March of 21 in a couple different roles, but my background is equity trading, so I know that the best. And we've got a great equity trading operation here at Alpaca. Uh, Happy to explain it. So basically, when you enter an order, several different things are going to happen. Well, the one thing that's going to happen is either we're gonna route your order. We may fill the order principally against ourselves, depending on the kind of order type. It's usually going to be a fractional order. So in that case, we're just going to execute the order. And then if we route the order out to the market, we have a best execution committee that will kind of determines the firm's order routing strategy. So we're going to route the orders kind of based off of execution metrics. We have an index that we've created internally that we use to evaluate each venue's execution quality. We have three different market makers right now that the order could go to. So we have our own principal venue, primarily for fractional share executions, and then we've got three wholesale market makers that we will route the order to, and we will route them the order. We're really looking for them to fill our orders better than the inside of the market. So there's something called the NBBO, National Best Bid Offer, and if you're selling, we're trying to fill your order higher than what the current bid price is, and then if you're buying, we're trying to get your order filled uh, lower than what the ask is in the marketplace. So you're trying to get your order filled better than what's available in the market. That's the mission of the Best X Committee. So we will route your order to the market maker. They will fill the order. They can fill it principally themselves. They could route the order to an ATS. They might send some of that to an exchange. That might send it to an ECN. So they have several different things that they can do with the order once they receive our order. But we're going to hold them to the standard of what was the quote at the time the order was entered. So let's just say they send it out there, it gets filled, on an exchange. So, you sold, 100 shares, at $10. So immediately in your account, you see, that you sold the stock and that you have $1,000 in your account to spend. So that money is actually not going to be received by Alpaca for 2 business days. So currently, trades take 2 business days to settle. And so, if you buy something on a Wednesday, the money's really not there for Friday. So, but you have access in your Alpaca account to go ahead and use that money to buy something else if you would like. Your buy trade's not going to settle until Friday as well. So the trades
Yes.
have the same settlement date.
So, how does that work for Alpaca? Are there like some challenges for it? Like, am I borrowing your money? How does that work?
We do have margin accounts at Alpaca, and there are limitations, on the margin accounts. You can only borrow so much money. You only hold so much of a position. You only have so much of a position overnight relative to the equity in your account, and there are risks. So we're constantly having to monitor clients' accounts to make sure that they're over the house requirement that we have set, and also to make sure the equity's not going down intraday. Because if you're in margin, you can actually lose more than put into the account. You can put in $3,000 and end up owing us $1,000, let's say, in a specific scenario. So we're constantly having to watch accounts intraday for that risk.
Okay, that's interesting. So it takes two settlement dates because I know like some companies do, they don't give you the money right away, like it shows there as cash, but you can't use it to buy more. Is that going to change?
At Alpaca, no, everyone has a margin account, so you're able to use that money to buy another equity. Now, to withdraw the money from the account is a little different, but if you want to use that money to buy something else, that's not an issue, and it's no, it's not going to be something that's going to change anytime soon. What may end up changing down in the future is the industry is going to be going to potentially a 1 day settlement starting in 2024. So, they'll be right now trades take 2 days to settle. So at a company like Alpaca, that's mainly retail, it's not really an issue because we have, for the most part, clients' funds before they trade.
Yeah.
And more an institutional where there's delivery versus payment trades where they might do the trade and let's say you're selling something, the assets might be held at a prime broker and they have to send the shares to the executing broker. That all has to be done by settlement and then the money exchanged as well, going back to the prime broker. So, there will be some challenges when the industry goes to 1 day settlement. I think a lot of the operational processes need to be at everyone in the industry need to be, automated as much as possible. It's really going to put a lot of stress on the back office, um,
Okay.
industry wide.
Yeah. Okay. Very interesting. So that's until 2024.
Yeah, potentially. Maybe they'll push it back a little bit. It's a lot of times these big
Yeah.
transformative things they get pushed back. So that'll put the US at a place where all the other developed markets, equity markets in the world are going to be on 2 day settlement and we would be on 1 day settlement.
Mhm.
And it will present a lot of challenges also with people, like in different markets. If you're in Europe or you're in Asia, the currencies are going to take 2 days to settle. So if you want to buy a US equity, the FX takes 2 days to settle and you've got to pay for the equity in 1 day. So there's all these kinds of things that really need to be thought out, by the industry really before it goes. But it's going to happen. I think it's just a question of when. I think investors really want it to be. They don't understand why things take Tuesday to settle. A long time ago, the exchange actually would close, like in the '60s. I've talked to people who've told me this that they used to shut down the exchange on Wednesdays, and on Wednesdays they would have to work and just do like trade reconciliation, between buyers and sellers. So we're kind of, and even before that, then we went to a 5 day settlement, and then we were at three, and then I think in 2017 the U.S. went to a 2 day settlement. So
Okay.
it's getting
Getting
pushed.
better.
Yeah, well, hopefully one day we'll get things. We'll have like same day settlement, or things will be in a
Yeah.
blockchain, right? I think that's where a lot of people want to go.
Yeah.
So
I mean, it looks like we're moving towards that. So,
yeah, absolutely. I guess this is we're all part of history, right?
right. Perfect. Thank you so much for explaining that. So, all of our viewers, let us know what you want to watch next, and we'll explain it to you. Thank you so much.